Hello and welcome to the Blog Network. Today we have a familiar face and an informative topic. A common question for business owners and individuals is who gets audited. Today, Mark Goodfield, blogger otherwise known as the Blunt Bean Counter. Welcome, Mark. Thank you for coming.
Thanks for having me, Starlet.
Well, tell us a bit about this auditing selection to educate our viewers.
Well, Starlet, I would suggest there is nothing worse than a scorned lover, a business partner you have had a falling out with, or a dismissed employee to trigger a Canada Revenue Agency audit. These individuals know your little secrets, a cash deal here, an offshore account there, and a conference you expensed that was really a vacation. These people are also vindictive, and in some cases, they make statements and claims that are not factual in nature. However, the claims are enough to bring the CRA to your door.
That's some nasty stuff. Is there a particular way or type of audit the CRA uses most often?
The CRA also likes net worth audits. These are audits undertaken because you live in a 3,000 square foot home, have a Porsche and kids in private school, and yet show very little income on your tax return. Typically the CRA either stumbles upon these situations, or information from one of the vindictive individuals we discussed earlier surfaces.
How about those who are audited without it being sparked by an ex-companion?
Through experience, there are a few common ways taxpayers can trigger audits. The reasons for audits are specific to individuals as well as specific to corporations.
Okay, break down each for us, Mark, both individuals and businesses.
Certainly. Let's start with desk audits. Desk audits are information requests in regard to certain deductions claimed, as opposed to a full-blown audit for individuals. You can expect an inquiry if you claim any of the following: a significant interest expense, an allowable business investment loss, usually if you held shares in a bankrupt private Canadian company, tuition from a university outside Canada. Typically the child and parent are tied together, as most children transfer $5,000 of their tuition claim to their parents, a child care claim for a nanny.
What happens in these situations?
In all these cases you're just providing backup information. These are not the scary type of audits. The full-blown shake-in-your-boots audits seem to occur with regularity in regard to individuals who earn commission income or self-employment income and claim expenses against that income. In those cases, CRA gravitates to auto expense claims, requesting logs books they know 1 in 100 people actually keep, and advertising and promotion expenses they consider personal in nature.
Okay, and corporations?
Corporations seem to be selected to be audited for the following 3 distinct reasons. They carry on a business that is CRA's flavor of the year. Some prior flavors have been pharmacies, contractors, and the real estate industry, and any other industry CRA feels is a cash is king industry. Second, corporations file general indexed financial information. This information provides a comparative year-to-year summary of income and expenses. It is suspected by many accountants that CRA uses this information to review year-to-year expense and income variances of the filing corporation, and to also compare corporations within a similar industry sector to identify those outside the standard ratios, but we don't know that for certain.
Oh, okay, and the third reason?
The final reason is that it is just your turn. I have no knowledge of this, but it seems like CRA just runs down a list, and if you don't get caught in regard to number 1 or number 2, your turn just eventually comes up.
Well, there you have it, folks. To avoid being audited as an individual, beware of claims you expense to your business, and keep logs to be on the safe side.
In all cases, it is imperative you keep your source documents to provide to the auditor. The CRA more than ever wants source documents. It is also important, if you and not your accountant are meeting with the auditor, that you try and keep your cool. In the end, the auditor is just doing his or her job, and if you treat them badly, you are not doing yourself any favors.
That wraps up our auditing segment with Mark Goodfield. Thank you for the informative advice, Mark.